Here we go. For today's agenda, well, first we will do a short introduction. Then we will have a look at some practical case studies, mostly relating to the new CRS guidance in Switzerland, and also the inquiries from the Swiss tax administration. And then we will end with a Q&A session. And here you can address most of your questions. Of course, if something is not clear throughout the presentation, unmute yourself and ask a question. But otherwise, I think many of you have similar questions, so we can take them all, gather in the Q&A session and take it all there. But yeah, if there's something you do not understand, then please let us know. So this webinar is a follow-up from our last webinar on the 5th of July, 2021, where we did have a look at obligations of a Swiss financial institution, new CRS guidance in Switzerland, inquiries from the Swiss tax administration, and CRS audits. And we got so many questions on these topics that we decided to make this practical case study session as a follow-up. So this is again focusing on Switzerland. Of course, much of what we say today is also relevant for FIs in other jurisdictions, or similar at least, but this is really focusing on Swiss financial institutions, just to be clear on that. So it means that other entities in other jurisdictions may be assessed differently. And yeah, what we said is basically we make some simple cases that probably many of you have come across or are dealing with at the moment. And hopefully this will shed some light on what you have to do or how you treat the situation. And probably we can help each other out a little bit when we share our insights here. I am here today with Lea Stühlinger, a team member of ours here at Kendri's regulatory team, and with Anna Skudlarek, my predecessor, who helped build up the regulatory team to its current glory. And I had then the pleasure to take over from Anna a little bit more than a year ago now, but we still work very closely with Anna, and I'm happy to have her here with me today. And me, you have probably seen me before, Emily Mahler. I head up Kendri's regulatory team. We deal mostly with CRS FATCA queries, but also other regulatory topics, such as mandatory disclosure rules, BO registers, everything basically that we come across or our clients come across in the daily life of a fiduciary. Good. With this, I will hand over to Lea, and then she will walk you through some of the first case studies that we have.
Thank you very much, Emily. Exactly, my focus will lie on the new CRS guidance, respectively its impact on the fiduciary industry in Switzerland. I will just very quickly repeat the main amendments of this new CRS guidance before we then discuss several more practical examples. Topics of particular interest for our industry are the updates to the account holder concept in case of trusts, FI trusts, including foundations. This also includes a look-through approach in case of entity account holders. Furthermore, the FTA clarified and updated a few rules in respect to distributions. In case of a trust, which is an FI, oh, excuse me. So, in case of a trust, which is an FI, the equity interest shall be deemed to be held by any person who is considered to be the settlor, the trustee, the beneficiary, or the protector of all or a portion of the trust. This includes also any other natural person who effectively controls the trust. So far, it was not entirely clear whether or not to consider protectors and trustees as account holder of a trust, but this has now been clarified with these new rules. Switzerland has also introduced a new approach in regard to entity account holders of an FI trust, which is in line with the CRS implementation handbook. According to this approach, if a settlor, a trustee, or a beneficiary and the protector or any other person who effectively controls the trust is an entity, this entity and any other intermediate entities must be looked through, and the controlling natural person behind the entity must be considered as equity interest holders. The rules we otherwise know and apply in case of controlling persons of a PNFE need to be applied in such cases. But the identified persons will not be reported as controlling persons, but as account holders of the trust. And this is to be done regardless of the CRS classification of this entity. So yeah, this slide just really shows detailed like the differences of the two versions of the guidance, but you see that the main version, the main difference in terms of reporting and account holder concept is that we always include trustees and protectors as account holder of a trust.
I might add, Leah, to the slide. You will, of course, receive the presentation once we are done with it. So then you can have a closer look at this overview, as we will not go through it. Let's say role by role, but it's more to illustrate. And when it comes to the trustee and protector, we might mention that the wording has slightly changed, so that previously for protectors, it was an example that the protector could be such another person, and now it is clarified that it basically should per default be considered such any other person who can ultimately control the trust. And the trustees have been previously actually even explicitly excluded, but now they are explicitly included in the account holder circle.
Thank you, Emily. Exactly, and now with that, I would like to jump to the more practical examples. We will illustrate all these rules using a really basic structure with a trust and an underlying company. I think someone is unmuted. Maybe you could mute yourself. Thank you. Exactly, we will show you the differences using a trust and an underlying company. This trust, sorry. Emily, can you maybe jump to the next slide? Thank you very much. This trust has a Swiss trustee and is hence considered to be resident in Switzerland for CRS purposes. And as just mentioned, the rules regarding the settlor and the beneficiary remain unchanged, but the trustee in this case, or any natural person behind the trustee, which is often also resident in Switzerland, will be considered account holder, but if he's resident in Switzerland, will not be subject to reporting. But there may be other cases where the trustee is reportable. For example, if we have a foreign co-trustee or a natural person behind a corporate trustee residing in another jurisdiction. Same rules do of course apply in case of corporate protectors or individual protectors. In this example, there are two trustees, or in case of a foundation, two members of the foundation council in different jurisdictions, which means that the trustee, which is here resident in Liechtenstein, would be subject to reporting with the total value of the trust.
Create a new one.
Exactly, the look-through approach in case of entities is applicable if we have a corporate trustee, and it's then required to identify the natural person behind the corporate trustee according to the controlling person rules. So in this case, this German individual would be subject to reporting as account holder of the trust.
And I think if I might jump in,
sure.
I think that, as Leah mentioned, in many cases where we have a Swiss trust, so to speak, I mean a trust with a Swiss trustee, most of the time the trustee, whether corporate or individual, is also resident in Switzerland. And in case we have a Swiss corporate trustee that is an FI, also the persons behind are resident in Switzerland. So this change actually in regard to a trustee becoming an account holder of a Swiss FI trust is not that big of an impact on the Swiss fiduciary industry as we have seen it. But there are, of course, cases where we do, for example, Switzerland is a small country and where we have people that, for example, work in Switzerland but live in Germany or France or Italy. In German, we call them Grenzgänger. And then all of a sudden, these persons could become relevant. So this is something that then, of course, could be quite a big impact for this individual, where we would see that, for example, all of a sudden this poor German resident person behind a corporate trustee would have to be reported as an account holder of a number of trusts. And I'm sure that the German tax authorities are really excited to receive this, these reports where they see that this person has a large wealth abroad, and all of a sudden they get their hands on it. So this might, of course, create some, in certain cases, some quite, let's say, unfortunate situations.
Exactly. And we have, I think, in the next slide, here we illustrated a situation with a corporate protector of a Swiss FI trust in the UK, a corporate protector, which means that we would have to look through this corporate protector to identify the controlling persons. This means these two persons who are living in the UK would, again, as for the trustee, be reported as account holder of this trust in Switzerland.
And I think we see this more often, actually, that protectors are subject to reporting, because protectors are, to a, let's say, a larger extent, not necessarily resident in the same jurisdictions as where the Swiss FI trust is. I kindly ask all of you to mute yourselves so that we don't, or remain on mute. Let's say we have muted all. And it would be excellent if you would stay muted, so that we don't have too much disturbances in the background. Yeah. So excuse me and thank you. Back to the protector. Yes, we see in tendency, at least in our client population, that it's rather protectors and trustees that are affected by this look-through, because most of the time a corporate protector would have been an FI and would have not been reported, but with the new look through also the individuals behind. And again, maybe not each person, let's say the owner, this can be the owner or the board of directors of this corporate protector, they're maybe also not extremely excited about getting reported as an account holder of a trust, where they, of course, cannot, let's say, touch the money. So here some questions also arise, and probably you have also experienced this in your everyday life.
And last but not least, in regard to the look-through approach, same applies for corporate beneficiaries, same rule apply. There are cases which are rather straightforward. For example, if we have a passive NFE or FI beneficiary. But in our view, questions may arise in case of donations to nonprofit organizations, for example, like the Red Cross. And here we see different views and approaches on how to deal with it. And we think that it is important that clear and firm-wide policy in regard to such to these approaches established, and then yeah, exactly.
Yeah, and I think here, with regard to, let's say, with regard to the look-through approach, in case of corporate account holders, to a certain extent, it really makes sense, because the idea, as we at least interpret it, is that if you have a corporate beneficiary, or even in 2021, we don't see many of these corporate settlor, the idea is that you cannot just set up an FI or a corporation and hide behind it to create, let's say, a situation of non-reporting. So a look-through approach will be applied, which is basically to, let's say, make sure that you cannot avoid reporting just by hiding behind an FI. In the case of, for example, a settlor or a beneficiary, a discretionary beneficiary of a trust, I think that this is, let's say, highly legitimate. Then when it comes to the trustee or the protectors, which are, let's say, rather there in a professional capacity, not because they actually have an own beneficial interest in the funds of the trust, it sometimes becomes a little bit unreasonable, but it's difficult maybe to find an approach that that you know, kind of can differentiate between these different cases. But as Leah said, we also have some situations where it could also become quite strange. Like, for example, assume that this FI trust pays out a distribution to the Red Cross or another charitable organization. Then, I mean, what would be the purpose of trying to look through the Red Cross as a beneficiary? Wouldn't make much sense. This is something that is a little bit, I would say, a gap in the logic. And where it probably would be welcome with, or it would be welcome with, some more detailed guidances on in which cases maybe you do not have to apply the approach of the look-through. But in daily business, sure, that's fine. And Switzerland actually was one of quite few countries who excluded trustees from the account holder concept until recently, and after, I think, the peer reviews from the OECD, they filled this gap. So I think that this is something that we see it now in Switzerland. We will probably also see similar clarifications in other countries in the years to come. And I think with this, we are more or less done with the first chapter when it comes to the account holders. Does anybody have any immediate questions with regard to the account holder concept or the look through before we proceed to the next chapter? Then you have time to unmute yourself and ask questions. No, I think everything is crystal clear. So maybe to briefly just recap what we talked about. I do like this. I go back to here. So in terms of trustees as account holders, as mentioned, we do have the situation that most of the time the trustee of a Swiss trust FI is resident in Switzerland. So effectively there will be no reporting even though the trustee is an account holder. If we have, for example, a situation with co-trusteeships and a corporate FI trustee maybe in another jurisdiction, then the persons behind this trust would be relevant for reporting. Or if you have an individual, for example, in this case, we have a Liechtenstein resident co-trustee, then all of a sudden this person would be reporting relevant. So this might be a change in some structures. Then we have the example with the Swiss corporate trustee, where we say that we also have to identify the persons behind this corporate trustee. And unfortunately, we have then, let's say that can be a shareholder or maybe the board of directors. And we have one person living in Germany, for example, could be another country. would then be reporting relevant as an account holder. We have the same concept with the protector. Of course, if there were individual protectors, I think it's quite clear. Sorry, muting. It's quite clear that protectors have, as a main rule, been subject to reporting already before. Now it has been even, let's say, strengthened in the guidance that protectors are indeed to be considered account holders. And then additionally, with the look-through approach, you have the situation where you also have to look through corporate protectors and report persons behind. Here, I think we have, in one case, actually, let's say, had some issues when we had to wanted to obtain self-certifications from the persons behind the corporate trust protector, and they were not interested in being reported, so they were also not interested in providing a self-certification. So you can also sometimes, especially when the rules are new and you have to, let's say, ask for additional documentation because the rules have changed, then not everybody's always cooperative and you can find yourself in an uncomfortable situation. So with this, maybe we want to say that it's good to, if you have not already started, have a look. Will these updated rules or guidances have an impact on your structures, on how you will have to report next year with regard to the reporting period 2021? I think that's an important message. Then we have exactly the last example here with the look through of a beneficiary. Assume the recipient of a distribution is a corporation. Then we have a person behind this this entity who is, for example, resident in Sweden. Then this person behind the corporate beneficiary would be reported as an account holder and as a recipient. I think this is also something we do not see very often, at least in our everyday life, but we cannot, of course, speak for everybody. But here you see illustrated basically the, let's say, the effects of the look-through. Excellent, thank you. And I see we do have two questions in the we did get one question with regard to an active NFFE. I'm not sure with hello. I think we cannot hear you that well with the sound. Maybe we can. I'm very sorry, we cannot hear you. I think the sound on your end is not very good. Maybe we can take it up and later in the Q&A session. Sorry about that. And then we do have one more question. Let's see, is it correct that a trust with a sole Swiss trustee is not required to be reported as trustee if resident in the same country as where the trust is resident for CRS purposes? Yes, so basically, let's assume we have a case where we have a Swiss trust. There are no Swiss trusts as such, but or not yet at least. Let's say we have a trust with a Swiss trustee, and the trust is therefore by grace with trustee for CRS purposes considered to be a Swiss FI. And then we have a Swiss trustee. Then yes, basically it's a domestic situation. You have a Swiss reporting FI, the trust, and you have the trustee as an account holder resident in Switzerland. There's no cross-border element here. So effectively the trust would not be reported, although it is an account holder. And then I got a question, we got a question regarding the look-through. And when to report shareholders or when to report directors of the entity. So here it really depends on the setup. So basically what you do is that you apply the controlling person concept irrespective of, let's say we have a corporate trustee in this example, which is an FI. it's not a passive NFE, so these persons are not per se controlling persons, but you apply the controlling person logic when you identify the persons behind, the warm bodies behind this corporation. And then you really apply the whole controlling person logic where you say, first, can you identify anybody who owns 25% or more of the shares in this company? If so, then you take these persons or this person. If not, you look, can anybody control the entity by other means? And if not, you go to the senior managing officials. So most often we look either at the owner of an entity. Let's say you have a sole shareholder of a corporate trustee company, then it's this person. If you have, for example, let's say we can take an own example. Kendris has a Swiss trustee group company. So ultimately, this company is held by Kendris, and Kendris is held by a large number of employees and partners. So nobody holds near to 25%. And then you can say that, well, we cannot find anybody who has an ownership interest big enough. So then you start looking at the senior managing officials instead. So it will basically really depend on the situation at hand. And of course, if you have any specific questions, case-specific questions, you can always contact us after the webinar. We're happy to help if you need assistance with analyzing a case you have. Good, thank you. So, yes, okay, thank you. Now I got a clarification on the active NFE question as well. So yes, an active NFE is normally, of course, reported only as an entity and there's no look through. But with the new guidance saying that you must always look through if there's a corporation, basically irrespective of whether it's an active NFE or an FI, then you would have to look through also an active NFE or an FI. So this is, let's say, quite a big difference. If you have, let's say, an active NFE corporate protector, you would have to still look through and treat the persons behind it as the account holders rather than the entity itself. I hope that's clear. Thank you. So, and sorry about the sound. So good. So you can use the chat or you can unmute yourself if you have questions. But now I think I hand back to Leah and we go to the next part of the presentation. Thank you.
Exactly. So now we have the right slide. Thanks a lot, Emily, for these additional clarifications. And I will just really quickly repeat the new rules in regard to distributions. So generally, a reportable person will be deemed to be a beneficiary of a trust if he or she is entitled to receive directly or indirectly through an agent, for example, a mandatory or a discretionary distribution from this trust. In years in which no distribution is made to a discretionary beneficiary, the person is not considered to be an equity interest holder.
And maybe just to be very clear, this is, let's say, not new. This is this remains unchanged. This is the same old rules, but we wanted to first give you the background of, let's say, when a person is an account holder due to a distribution.
Exactly. And now the new rules come into play. And with the new CRS guidance, the FDA clarified that a payment on behalf of a beneficiary which constitutes a reportable distribution. So even if it's not directly paid to this beneficiary. Additionally, a distribution is necessary if a beneficiary receives a loan from the trust, which is either interest-free or if it carries an interest which is not at arm's length. In such cases, the loan itself, it's not reportable, but the difference to an at arm's length interest rate constitutes a reportable distribution. And if a loan which was granted to a beneficiary is then written off later on at the expense of the trust, the total amount that was written off needs to be reported as distribution. And we will now also continue with a few examples to illustrate this new rules. This first example shows an indirect distribution, which means that the trust makes a payment to a third party for the benefit of the beneficiary. And in practice, we see this often when, for example, legal or school fees.
Yes, but I can come round with you, but don't talk to me.
When legal or school fees need to be paid. And the trust would in this case report the payment as distribution to this beneficiary.
And I think that this is, to be quite clear, this should be hopefully nothing new actually to anybody within the business, but the FTA made this clarification in order to make sure that basically you cannot say that, well, the trustee just paid my Visa credit card bill, but I actually didn't receive the money on my account, so it was actually done a distribution to me. Oh, how lucky. So basically this is clarification for this, but it should be, hopefully we all agree that this was already the case. This was already the case. Good, thank you.
Thank you. And with the next example, we would like to show you how this fictional loan reporting works. And as explained before, if a Swiss trust grants a loan to a beneficiary, which is assumably tax resident in a partner state of Switzerland, and the loan is non-interest bearing or carries an interest which is not considered at arm's length, the trust needs then to report the difference to an at arm's length interest as annual distribution. In this example, the beneficiary received a loan with a total amount of 1 million Swiss francs and no interest. It's not further defined in the guidance how to interpret at arm's length. And we see different options here. In some cases, it might be possible to refer to the tax or respectively valuation principles in the country where the recipient, meaning the beneficiary, is resident. For example, the deemed distributions which are being declared in the UK. Another approach is to follow the interest rates which are annually published by the Swiss FTA. In this case, with a loan in Swiss francs, this would mean that for the year 2021, an interest rate of 0.25% would be applied, meaning that next year we would have to report a fictional distribution of 2,500 francs. But these are just examples on how you could deal with the fictional distributions. And
I think one of the let's say crucial points here would really be to how to basically establish the number to report, like Leah said, because there's no further guidance, and anything that is arm's length is very, very subjective and will of course change over time. Here we think that generally it's just it's important to have at least had a look at it, made an analysis, how you then to what exact number you come. Maybe there are different ways to let's say argument your way towards a result. It's just important that you apply it consistently and have some sort of basis, not that you just pick a number that you like, but that it has some kind of reference, for example, to the Swiss recognized rates or to the tax rules in the jurisdiction of the recipient. So here probably we will also see different types of ways to come to this fictional interest, but it's important to just know that it has to be done.
Exactly, and in such cases you would also have to reassess it on an annual basis, whether your approach is still applicable or not.
And then I think in this example, for example, where we say we have 0% interest, then of course we only have to, let's say, rely on the basically year-to-year analysis. Then actually, and I hope the persons who I discussed this with or who we discussed this with will not mind that we will take it as an example, because it was a very good question. The question once arose, let's say that there is a loan and the loan actually carries an interest rate and the interest rate was fixed for, let's say, a period of 5 years. So at the time for the granting of the loan, let's say the parties agreed to, I just take a number now, agreed to a 1% interest rate. And I mean, this is how I would maybe try to negotiate with my bank if I have a house mortgage, that I want to, let's say, tie my interest rates down to know that for the next 5 years, I will have to pay an interest rate of 1% or something. Or I can, of course, choose to have it movable, but there are cases where you would say that you would agree on an interest rate for a term. And then what happens then if this interest rate that you have agreed upon will 1 year be too high or 1 year be too low? This is also then an important, let's say, an interesting question when you, let's say, assess the arm lengthness of the interest rate. And here I think that it might be fair to say that, well, at the time for the, let's say, agreeing upon these terms, this was arm's length, and as long as it's not going on forever for the next 50 years, but maybe for the next 2 or 3 years, it might be legitimate to say that even if it's a little bit too, let's say, too low or too high, you could still basically say that it is arm's length considering the circumstances. There are, of course, also these kind of gray zone cases where it's not that simple, that you just have a 0 interest rate and you just apply this fractional, but you really have a number to kind of refer to. So we will also probably see cases here. Thank you.
Thank you. I think we have one example left, exactly. As this just described loan would have to be reported as a distribution of 1 million Swiss franc if it was waived entirely at the expense of the trust. This was also mentioned before and is now, or was also clear, at least for us, before the new guidelines were published, but is now further described in an example in the new guidance.
And I think this is, let's say, a quite important clarification if it was not clear to everybody, because otherwise it would again be way too easy to just say that, well, we just grant a loan and then we waive the loan and nothing happens, nothing is reported. That would not be the prudent way to go about it. So this was, I think, a good clarification, and then you see the difference. And this also basically means that, let's say, there might have been, at the time of the granting of the loan, the intention might well have been that the beneficiary should at some point repay the loan. And for some reason, let's say, this will not happen or cannot happen because this person does not have the funds to or the means to pay it back, then it's waived. There might be legitimate reasons for this, and then it's reported as a distribution with the full amount. And this is also an important thing. And we got a question here in the chat. We might just take it here. Is there a need to report a distribution or loan write-off made from a passive NFE? I mean, if this trust would be a passive NFE, it would not have any reporting obligations. So if a loan waiver here, for example, would take place, then there would be no reporting in that sense. So if I understand your question correctly, that it really depends on the classification, of course, of the trust. Most trusts are normally FIs, but in case of PNFE, that would probably not be reportable. I'm not saying this, don't use this as a tool to avoid reporting. No. Then we have also seen cases where, for example, let's say you have a subsidiary or let's a company held by the trust or the trustee of the trust, which has granted a loan to somebody and waives that loan, and then you could really trigger other consequences that it should be, because let's say a company cannot just give away money to anybody. So then you can find a situation where you would have to treat it basically as a distribution from the company to the trust, and from the trust as a distribution to a beneficiary, etc. So waiving loans to left and right, that could really be quite a pitfall. So if you at some level in a structure have a loan that is waived for any reason, I really advise you to carefully consider what the consequences will be here, because there can be quite surprising or unfortunate reporting situations. So just that you don't miss reporting. So always careful with loan waivers. And in this case, I got the clarification here, the trust would be a passive NFE. Well, no, since the trust doesn't have any reporting obligations, it cannot report, right? And so in that sense, it would fly under the radar. Then of course, other things, maybe this trust holds a bank account with a bank, and the bank reports the trust and its controlling persons. So other type of reporting maybe do, but the loan waiver would not be reported. Yes. Excellent. And we got another question with regards to maybe here rather to indirect distributions. If minors with a guardian receives a distribution, who will be classed as a reportable person? Here we would really have to refer to who is the beneficiary, the recipient of the distribution. A minor can be a beneficiary of a trust, of course. Maybe this minor doesn't have an own bank account, so maybe for let's say the distribution is made to a child, but let's say physically the money goes to the account of the parents or something like that, then I would say that the child is still the recipient of the distribution and would be reportable. So there's no age limit for CRS reporting. We have received actually some questions about this during the years, in case, for example, we have a minor beneficiary, we make a distribution, then we don't have to report, right? We have to say that actually if a distribution is made to anybody, it doesn't matter if they're 2 years old or 100 years old, they would be reportable. So the recipient of the distribution in the terms of, let's say, the beneficial recipient, so to the benefit of whom is it as the distribution made, this person will be reported. Yes, excellent. And I think that more or less covers it when it comes to the distributions. Also here we have a couple of minutes for any immediate questions, and otherwise if something pops up along the line, we're also happy to take it on the Q&A session. So then I think we move on to the next exciting part. So also in the last webinar, we talked a little bit about inquiries from the Swiss tax administration. Of course, the Swiss tax administration are not the only ones sending inquiries with regard to CRS reporting. We will now focus on really questions from Swiss tax authorities, but we have also seen other cases where, of course, for example, the person subject to reporting, may this person live in Germany or Sweden or Russia or UK or wherever, may of course also get queries from the local tax authorities. But now we thought we take a few cases which maybe have also let's say that have affected clients of ours or even us ourselves, and maybe they might be helpful also for the rest of you, because you might have received questions similar to this, or you may do receive such question in the future. So we'll try to paint the picture a little bit to see how the reporting might be correct, it might be incorrect, but it basically leads to questions from the authorities, which might be completely legitimate again, But you, of course, have to deal with it and try to answer their questions. So one typical case which we have seen quite a lot when it comes to tax administration queries are persons that are being subject to reporting in a professional capacity, for example, trustee or protector. Because as a trustee or a protector of an FI, you're an account holder. Under CRS, there's no telling what type of account holder you are. It's not like with controlling persons that you can choose different capacities of controlling person, for example, ownership or professional capacity, but you're an account holder, period. And then that would sound like you are actually also the beneficial owner of the funds that you are being reported with. So let's assume we have a Swiss passive NFE trust with a bank account in Luxembourg. I think many Swiss entities do have Swiss bank accounts, but this is actually a real case that we had. So we had in a case Swiss passive NFE trust with a bank account in Luxembourg. The Luxembourg authorities reports the trust as an account holder and its controlling persons, including trustee and protector. And this report probably normally should contain a specification in terms of controlling person, what type of controlling person it is. I cannot remember in this case exactly if this was correctly done, but in any case, the Swiss tax authorities then receives a report where they see that, well, it was not about me, but let's take me as an example. Let's say I was one of these persons and all of a sudden they see that, oh, Emily Mahler is the controlling person of an entity with a bank account in Luxembourg where there's 20 million. And we have not seen anything about this in Emily's tax return. What is this? And then they send a question. And then Emily Mahler or whoever receives this must explain, for example, the circumstances why she was reported, and assuming this is of course correct, that this money does not belong to me. I was just reported in my professional capacity. We can understand why the authorities would want to ask a question like that, but of course it might also be for the individual in question, might feel a little bit scary the first time you receive a letter where, where the authorities basically are asking about your hidden away money. So it can be a little bit stressful, but in most cases we have also seen that just by correctly explaining the circumstances, then most of the time you can resolve it rather quickly. Then we also have seen cases, for example, where, let's say, an unfortunate over-reporting has been done. So actually, I mean, it doesn't really matter if the reporting was correct or not, but of course it's additionally, let's say, annoying if you know that it was also an incorrect report. So we also have seen a case with the Luxembourg Bank who reported a company, an account holder, and its controlling person. The problem is that it didn't just stop by reporting the actual controlling person, which would have been the shareholder in this case, but it also reported the directors of the company. Which was a clear over-reporting, so it was incorrect reporting. And these directors, again, they received then queries from the tax authorities asking about this report. And again, you have to go on an explanatory mission. Why has this happened, etc. And then in case of over-reporting or wrong reporting, one might also consider, do I want to take any sort of action towards the bank, in this case in Luxembourg, who over-reported or basically reported something they should not have done? Is there a possibility to have this report corrected, etc.? So of course, also other related queries can pop up. This again, of course, probably you would prefer doing something else than writing letters to the tax authorities explaining why or how or but again, I think that's important. Just if you receive a letter, something like that, don't throw it away. Really try to reply to it, be cooperative, and then most of the time it should be possible to sort out. In terms of timing of reports, maybe we can also say a few things. So basically, the inquiries that we have seen maybe in 2020, 2021 refers to reporting that was done for reporting period 17-18. And if you get a question now, for example, with regard to reporting period 17-18, then probably they have also received then the reports for 19 and 20 already. But this is basically, I guess they start at the bottom of the stack and work their way up. And in the early days of CRS, there were, I think, more false reportings than we see today. So this might mean that if somebody didn't really get the concept in 2017 or 2018 for the reporting 17, they might have corrected those errors by now. But it's just interesting to see this gap in time, because for a long time we didn't hear anything. So all of these millions of reports were sent to all of these different countries or exchanged between these different countries. And we received, let's say, surprisingly, or clients received surprisingly few questions. And this is now that we see that there's basically a 2, 3, 4 year delay in when these questions come. I will also speak a little bit more about, let's say, how the authorities go about it later. So let me come back to that part at the end of this session. But yeah, so probably some of you have also made similar experiences, that you now receive questions for 17, 18, and then you basically, you already forgot about that time. Then, you are reminded now, abruptly reminded. And then, of course, if you have the feeling that the questions that they are posting with regard to, for example, 2017 is still also valid for other years, maybe you can also proactively approach that. Yes. Then we also have quite a few fresher and actually still pending matters where a trustee has been subject to report. So basically, and this is again a false report, most of the time when a bank sets up, a trust sets up a bank account, basically a trust has no legal personality. So the trust in itself, it's not a legal entity and cannot sign an agreement. So what you usually see is that the trust or the account is opened in the name of, for example, ABC trustees as trustee of the XYZ trust. So this is what you would see as on the account opening documentation. Who is the account holder? It's ABC trustees as the trustee of the XYZ trust. Then it's of course clear, I think, to all of us that the trustee only holds the assets in trust in a, let's say, a legal capacity, but not the trustee is not the beneficial owner. That's another concept. And in one case, we have seen that the trustee was reported as an account holder of a trust, which is not per se incorrect, but let's say in own name. So all of a sudden, the tax authorities knock on the door of the trustee and say, we didn't see these 20 million in your tax return or in your financial statements. Where are they? And then you have to again go on an explanatory mission. Why does first maybe you need to try to find out what happened, what was reported. That's all, not always known to you if it was done by another, for example, a foreign bank in this case. So you first need to go on a search mission and see what was reported, why, how was the company documented, etc. Very good question. Why would the bank report if the trustee is an FI? Yeah, it was a false reporting. The bank should not have reported at all. The bank should not have reported at all. So basically the bank reported the trustee of a trust as the account holder of the account, although the trust was an FI. So it was false to begin with, how they had reported it. Well spotted, thank you. So first to find out why and how, etc., and then try to explain it to the tax authorities. And not everybody we maybe should not expected. Not everybody at the cantonal tax administration is extremely, let's say, knowledgeable when it comes to trusts, which I can understand because it's a foreign concept. So then there's a lot of explaining to do. And I think we have heard of cases similar to this, where it has even gone so far that the tax administration has issued a tax bill based on the reporting. So depending on, let's say, the circumstances, or maybe also who you get in contact with and how well you can explain it and make it feasible, etc., it can become quite a cumbersome and time-consuming exercise to write back and forth, and then you want another document, and then you provide the document, and then you have to wait for 2 months, and then you get a new query, etc. So sometimes it can be time consuming, and I guess here it's just try to take it easy, take it calm, and then as long as you have nothing to hide, it will at some point pass. But this was an all in all extremely unfortunate case, because it was extremely falsely reported from the beginning, so it should not have happened, and then the question might not even have popped up. Then quite a similar case we've seen recently is, I think, more, let's say, almost of a misunderstanding, where also Luxembourg Bank, where we have seen basically ABC trustees as the trustee of the XYZ trust have been reported. Again, it's an FI, so it should not even have been reported by the bank. The bank had failed to basically properly document the trust as an FI, although self-certifications had been given to the bank. So they treated the bank and the trust as a passive NFE. Despite self-certifications stating otherwise. And the trustee of the trust, basically the name of the account holder, ABC Trustees, as the trustee of the XYZ trust, was reported as an account holder. And here I think that was maybe less bad than the previous example, but here the question from the tax authorities was not, let's say, the manner of in which the report had been done or whether it's correct, but they could not drop the fact that as the account holder, basically the reportable account holder, it was ABC Trustees as trustee of the XYZ trust. And they interpreted this as if the trustee was then the account holder, let's say in own name. So again, then they ask, why was this account not declared? Why was it not included in your books? And then the trustee will have to explain that, first of all, it was an unfortunate reporting. Second of all, this is basically held in trustee fiduciary capacity. We're not the beneficial owner of the assets or the income. And again, here it might be quite tricky to try to explain the whole trust concept to somebody who might not have come across it before. So here you would have to have some patience and see how you can resolve it. And I think, to my knowledge, the matter I'm thinking about is not yet resolved, but we shall hope for everybody involved that we can put it to the archives soon. Then as one last example, which is also something that some of you might have come across, we have the example with a Swiss charitable tax-exempt foundation that has accounts abroad. So basically the charitable foundation naturally has a charitable cause. It wants to, for example, help unprivileged children with school fees, etc. And then in order to be able to actually also follow these charitable purposes and then give money to charitable causes, I suppose it is quite common that the foundation has assets which is invested in order to basically grow. So it doesn't make sense to just have an account with $1 million on it. Nowadays, it makes maybe more sense to invest it in a portfolio, in equities, etc. And then hopefully you get a return and you can basically make the money work and grow. And then you can give even more for your charitable purposes. So this, I think, is quite an, let's say, a normal setup. Now, of course, since the foundation is tax exempt, didn't really have to disclose much to the tax authorities. And all of a sudden, the tax authorities receives a report where they find out that this charitable foundation holds a bank account, let's say in the UK. It's an investment portfolio with 20 million in it. And then the tax authorities might want to ask, why do you, okay, we received this report. We see that you have assets abroad. Can you please explain a little bit more the background? Then in the case at hand, the foundation would just explain that, yes, these assets are basically being invested so that we can then follow our charitable purposes. So it's only to the benefit of the charitable cause of the foundation. And probably the matter can be sorted quite quickly. But here, of course, we can again understand that questions are being asked to maybe the tax authorities want to assess that it's really a charitable foundation that should be tax exempt, etc. You might have to provide some documentation. So I think here it's, for example, nothing is wrong. Nobody did anything wrong, but it might, of course, lead to questions because it's basically new information for the tax authorities, and maybe they have said that this year we will have a look at charitable foundation, or this year we will have a look at discrepancies bigger than XYZ amount, etc. We don't know exactly how they operate. And then again, you go on an explanatory mission, hope that they basically will understand you. Okay. So I think to sum up a little bit the topic of enquiries from the tax administration, the issues, if I may call them that, we see is most of the time, let's say the tax authorities receive completely new information. This might again be completely legitimate, but for some reason you were not even, let's say, obliged to give this information. And all of a sudden they receive the information from another party, and they try to piece the puzzle together. One, of course, let's say disadvantage is that there's not always enough detailed information contained in an XML report. So for example, if I'm being reported as the trustee of a trust, they don't know if I'm being reported as the trustee or the settler or the beneficiary. They just see I'm reported as the account holder of a trust with a value of 20 million, and they now ask, where are these 20 millions and why did you not put them in your tax return? So this is one example where everything is completely fine, correct, nobody did anything wrong, but there's a discrepancy, which then leads to the next point. There are discrepancies. Maybe this can also be discrepancies in valuation, for example, that another exchange rate was used or another way to value something. Let's say in the country where I file my tax return and in the country of a reporting FI, so they might have two different sets of information that does not really go together, and then they ask, why is this discrepancy? And to a large part, and we don't say that, or I don't say that to bash the tax authorities, but sometimes we also see that questions arise due to lack of understanding. For example, lack of understanding of how a trust works. Which is in a country that does not really know the trust concept is maybe not strange. I think this would apply to a large number of countries, to other foreign authorities as well. But a lack of understanding can, of course, lead to questions. And what is unfortunate when there's a lack of understanding is that they might not know even what they require in order to, let's say, resolve the question. So they ask a question, they ask for documentation, maybe sometimes documentation you cannot even provide. And not because you don't want to or you try to hide something, but they might ask for, and then if they're not sure, they rather ask for too much than too little, etc. And then you kind of get into almost a vicious circle of you cannot satisfy them because they don't really know when to stop or what they need in order to cure the error. So this is where we sometimes have to act as basically teachers and make sure that they understand it. And we have made some really good experiences where they have even thanked us basically for thank you for informing us about that, thank you for explaining, thank you. And sometimes you deal with people that are less facilitating. So here, as with everything or all areas in life, you come across some people that are more easier to handle and some that are less easy to handle, and you just have to deal with it. And as for solutions, well, I mean, I wish that we had a better solution than this, but basically the key is explaining. If they have a question, try to explain first, try to figure out why do they ask this question? What is the basis for the question? What happened? What are the circumstances? Is it correctly reported or not? How can I explain this so that they understand why, for example, everything is in order, in the sense that I didn't try to hide anything or etc. here. And then I hope, or I think that with time, now basically they're on the first round of questions with regard to the first reports. I think that the tax authorities will learn a lot. So basically when they have dispatched the first set of questions, the first battery of questions for the 17-18 reports, they will get a heap of replies. And I think that we can expect that they have learned a lot during this process. And when it comes to the next year, some questions they might not even feel like they have to ask, because they understand that, aha, this is how it worked last year, so we don't have to ask again. So I also think that probably the questions might become more relevant or more on point. Yeah, at least it's a hope of ours that sometimes, let's say, the stupid questions will not come again. But let's see how this develop. And I think if you have received any such queries from the Swiss or other tax administrations, but especially from the Swiss, it's just important, again, as I said, to basically take it seriously, deal with it, explain, reply to the letter, do not ignore it, seek advice if you're not comfortable with dealing with it yourself, and then it should be fine with time. Good. I think that leads us to the last part, and then we have some 20 minutes for a Q&A session. So if you have any sort of questions regarding what we talked about, account holder concept, look through, distributions, queries from tax administrations, or related matters, now you can either write in the chat. We will try to take a few of your questions, or you can unmute yourself if you're comfortable doing that, and ask the questions in person, so to speak, and then we'll do our best to reply to your questions. Yes, we have one question from a little bit earlier here. Exactly, referring to this look-through approach and controlling person. So in terms of the look-through approach, you will not find it under the controlling person part, but you will find it under the account holder, so basically the equity interest part. Leah, maybe you can help me with the reference. I'm very sorry, I don't have it from the top of my head.
3.5, I think. Exactly. Eigenkapitalbeteiligung.
In German, at least. I don't know what that's in French. Oh, and by the way, I think we heard some rumors that well, as you know, probably there's no official English translation of the guidance so far, but I think that the SATC is working on at least an unofficial English translation, which might be helpful also for the international crowd. Otherwise, yeah, we read it in German. Some of you read it in French. So if you look at the Eigenkapital, the basically equity interest definition in 3.5, you would be able to read more on the so. Do you have the page number, Leah? Maybe we can refer to the page. I think we can. We can surely find the page number and get back to you on that.
So in the German version, it's page 6061.
6061 in the German version. Okay. And if anybody has really, like, let's say, detailed or specific questions, then please, you can always get in touch with us after the webinar. I will share with you our contacts as well. We're always happy to, of course, assist you in any way we can. Good. Then, any other questions? Or observations, or you have experiences you want to share with us? So always happy to help. No, I think we have a calm crowd today. In the last session, we had so many questions we couldn't answer all of them, which is why we did this second one. So now I think maybe we have clarified a few things and answered the questions that we couldn't answer last time. So I can see that hopefully this means we have done a good job presenting to you. So let's see. There we have some. Exactly. So somebody commented that in regards to holding active NFE. So this is. I'm not quite sure what you mean, where the holding active NFE is a mixed type company where it earns passive income. And I'm afraid, again, we cannot hear you properly. I just hear kind of a robot voice. I'm very sorry about that. Yeah, no, very sorry. I think we have to do it in written. Active NFE classification is nothing that we specifically touched upon here, but of course we can always talk about it or see if there's anything we can do to assist you. Otherwise, please feel free to reach out after the webinar. Yes, so I muted you because we basically cannot hear. We just hear a very roboty sound, so we cannot hear you properly. I'm very sorry about that. Maybe if you could check your settings, and otherwise happy to catch up after the webinar. Sorry about that. Sorry about that. Exactly. But yeah, no, there are of course many interesting or let's say important topics here that we can touch upon, and also if you have requests or let's say wishes for future webinars, cases you would like us to have a look at, we're always happy to receive your input and incorporate it in any further planned webinars. So we're also always happy to see what you want to hear about, and then we will try to assist with that. Excellent. So if you don't have any further questions, I will let you go. It is, after all, 3:15 in the afternoon, and maybe you want to continue your busy days. I will not hold you for too long. So if there are no other questions, I will. We can end it here. I will remain for a few minutes if somebody has any follow-up questions and you didn't have time to formulate them yet. And to the rest of you, otherwise, a warm thank you from Leah, Anna, and myself, and from all of the Kenders family. Thank you for joining. And then keep a lookout for future webinars. We will send you an invite once we have something, probably beginning of next year again. And always reach out if you have questions or want us to look at something, or if you have, like I said, wishes for future webinars. You have our contact details in this presentation. I will share it with you. Where you have the contacts to me, to Leah, to Anna, and also our FATCA responsible officer, Christian Luc, who could not participate today because he's traveling. I have also included, or we have included links to our relatively new website, newsletter subscription if you want to subscribe to any of our newsletters, our news and insights page where we publish, let's say, blog posts and other news. And so basically you have the whole set of links. So you can connect with us on LinkedIn, you can send emails, even give us a call, look at our webpage, sign up for newsletters, and then basically you will not miss any news from us. So thank you very much, all of you, and have a very nice afternoon.